Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Thursday market webcast. Okay, daily chart. We had the Fed yesterday, and they took it straight up off of 39.31.5, which was our pre-FOMC price, the price that printed right before the announcement. They took it up into that 70 area. They made a new all-time high yesterday during the regular session. They followed up Globex last night by taking it as high as 78.5. Bonds put a ton of pressure on the tape in the Europe session, pushing it all the way back down to the pre-FOMC price. So I was saying in the room yesterday, look, first 24 hours, that level tends to print. It hasn't printed yet. It'll probably print here before we open, certainly by 9:30. But, if bonds are going to be a problem, you're going to start to see some two-sided trading, some exhaling, some moves down. Do I like them doing it at 3:30 in the morning? No. But I told all my European subscribers to be ready, and so I already heard from one of them this morning, and they were on top of it, which was nice. They love doing these moves in the middle of the night. So we were long a little bit, up into that 78.5 area. We got stopped out on the rest of our trade as it came back in, and we slept through the rest. I'm not chasing down here, and I'm not buying, so we're flat, and we probably will be into the open unless there's really something to grab onto here. Yesterday was an interesting day. They started by taking it down. They got down to our proprietary lower level 26.5. And what we ended up doing was just kind of saying, look, if you can't convert that level, you're not going to take it down any further, which is one of the basic tenets of our room and the way we trade for a decade now. And we ended up buying 26, which was nice because we're ended up long 26. It comes up into 38 and hangs out, and then we get a free look at the Fed. And you just kind of cross your fingers and you hope you don't get whipped out. Even at 2 o'clock. And I'm never really in a position, hardly ever, into the Fed. And they ripped it, which was great. And then we had a few after that. It was a good afternoon. It was good volatility as far as Fed days go. And it's put the week in a good spot. So what am I looking for today? I am very, very focused on what side of 39.31.5 we close on today. Converting that area opens up the ability to go down to the 9-day, which is the blue line there around 39.17, and a much deeper move would be that weekly pivot. The bears have dug themselves quite the hole, but with bonds doing what they're doing, it opens up the possibility of a decent little exhale here. Here's the problem, and I've mentioned this a million times, and I'll mention it again. Every single exhale, every one of them, okay? The most recent one being the 37.20.5 is a flaming buy. I mean, you look at this hourly chart, and they do this. I'm sorry, 37.10.5. Buy it, buy it, buy it, buy it, buy it, buy it. This one had the best, hope because they tried to buy it and they didn't. They just took it down here and they launched it yesterday. So these all get bought, and that's fine. That's just been the way the tape goes. If the bears would like to change that, the daily mid-band is at 38.77. Go down there and do something about it. If you can consistently turn that area into resistance, you will have a sell rallies tape instead of a buy dips tape. We talked about this a couple weeks ago when they were interacting with it. So, you come back here, the green line is your 20-day. So here, these were your opportunities to deal with it. And you can see they tried to hold it here, back, a week ago, a little more than a week ago. They screwed it up, and then we left it in the dust. Now it's not even on the chart. So if you want to deal with it, convert the green line. Simple as that. Simple as that. Until then, the dip buyers are at least going to try. It's what they did yesterday. They will continue to buy dips until the dip buying no longer works. You chase them out of the pool and they take their ball and go home and they find value somewhere else farther down the chart. Simple as that. That's the way they go. If not, if you let things get out of hand, for example, you've got the 5-minute mid-band right now is at 41.66. Our proprietary moving average is at 44.5. VWAP, 54.25. Daily pivot, it's 53.25. And then you've got the hourly mid-band there, 57.7. You can see that on the chart. If you lay down for 20 handles and you get back up into 55, 57, you better have an answer. You better have an answer, or we're going to end up back in the 70s again. And traders like me aren't going to care. Ooh, up, down, I don't care. It's fine. I don't have an ideology. I don't have, an opinion. Some people, all they want to talk about is the long side. Some people, all they want to talk about is the short side. I mean, I want to talk about what's moving now, and I want to trade that in a risk responsible way, and then move on to the next thing. I mean, so up, down, whatever, doesn't matter. We were long for the Fed move up. I was asleep for the move down, but we talked about it, and damn it, if I ever figure out a way to stay up 24 hours a day, we'd have done that one too. But watch that 31.5. It's the gateway to down below. But don't sucker yourself into thinking this is all of a sudden a bear market or all of a sudden a sell rally's tape. They're going to continue to try to buy dips. It's up to the bears to knock them down. And then, high noon is 38.77, daily mid-band. All right. Everybody have a fantastic day. Be safe, be healthy, take care, trade them well. Come check out the room. Talk to you tomorrow. Follow us over on Twitter, Instagram, and Snapchat at Princetontrader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.